On Startup Central. And ladies and gentlemen, let's begin the show then with putting a spotlight on D2C brand Pilgrim. It's Mumbai-based and it's raised 200 crores in a mix of primary and secondary rounds. In fact, it was founded in 2020. Pilgrim offers skincare, hair care and color cosmetics through its D2C website, e-commerce and quick commerce platforms. Pilgrim competes with Wow Skin, Mama Earth, McAfee, Plum. And to discuss more about the company's plans ahead after this fundraise and how it's looking to deploy this capital, how it's looking at its growth trajectory in this extremely crowded D2C segment, we're now joined by Anurag Kedia, the co-founder of the company. Thank you very much, Anurag, for joining us here on ET Now. First things first, and a pretty direct question. How are you looking at deploying this fundraise? Who are the investors? And where does this fundraise take the valuation of your company?
So, Sumita, thanks for having us. Very happy to be sharing where we are today. It's a 200 crore fundraise, which is a mix of primary and secondary. The secondary has been to facilitate some exits to early investors, including Fireside, which was our first institutional investor. The deployment of funds is going to be on a couple of counts. One, we started expanding our offline footprint 2 years back. And that journey is very exciting, very fascinating, and requires some more investments for the next 1 to 2 years. And that is a journey which we are undertaking. Currently, we are available across 10,000 retail points. And that 10,000 retail points, we would like to take up to 20 to 25,000 retail points over the next 10 to 12 months. So that is one key area where we will be investing. The second is in beefing up our research and development. We are an R&D company essentially at heart, and that's one of our key focus areas. And the third will be in brand building. We have a couple of celebrities, including Rashmika Mandhana, Manisha Koirala, Jennifer Winget as our brand ambassadors. And we would use this capital to amplify the relationship which we have with these brand ambassadors. This fundraise is led by some existing investors, including the Narottam Sexaria Family Office, Vertex Ventures, which are our existing investors. And Vertex Growth Fund and Anycut have joined this new round. And this is a substantial milestone for us, given that this is a significant valuation bump in just a span of less than 2 quarters. It also validates whatever we have been trying to build for our consumers. So we're very excited in terms of what holds, what is there for us in the future. The deployment of funds is going to be on 3 counts. One, we started expanding our offline footprint 2 years back. We are present across 10,000 retail points, and that is a number we'd like to take up. In the next 9 to 12 months, we'd like to be present across at least 20,000 retail points. We also have our exclusive brand outlets across India. Currently, 10 of them are live, and we'd like to take them up to 25 to 30 again by the end of this calendar year. The second place where we would like to make investments is our R&D. At heart, we are an R&D, a research and development driven company, and there is a lot of investments we're making further. And the third is to amplify our brand. There are a couple of brand ambassadors which we already work with, including Rashmika Mandhana, Manisha Koirala, and Jennifer Winget. And the work we have done with them, we would like to spend money to amplify that message.
Right. So a lot of your investments will go into brand building, into all of these celebrity brand ambassadors that you're roping in, and on research and development as well. That's very interesting to know, given the kind of competition that's building up in this space. And speaking of competition, how are you looking at gathering more loyal customers? It's not going to be possible just via roping in brand ambassadors. So will the company be looking at acquisitions to further solidify its position in the D2C market, especially when barriers to entry in the market are so low right now?
Yeah, so we welcome all kinds of competition, Sumita. We are very happy that there is competition, not just from D2C brands, but also the FMCG giants, whether in India or globally, are launching new brands in India. It's a good time to be a consumer. And we are very happy and welcome all kinds of competition. It keeps us on our toes and pushes us to launch better and more innovative products. If we talk about our retention, we look at something called as retention cohorts in terms of how many consumers come back over the next 3 months, 9 months, and 12 months and buy back again from the brand. And those retention cohorts look fairly healthy for us. 40% of our consumers come back in the next 12 months and buy from the brand's website itself. And another 10 to 20% buy from other places. So 50 to 60% of our consumers come and buy back multiple times over the next 12 months. So we're very happy with the way retention cohorts have worked out for us. We are not looking at acquisitions at the moment. We think there is a lot of headroom for Pilgrim to grow from where we are. And there are some new initiatives which are also in the pipeline, which we will reveal as we go along.
So you say that there's a lot of room for Pilgrim to grow, and we'll come to the growth point in just a bit. But as a brand, Anurag, you have about 250 products in your portfolio that spans across healthcare, skincare, makeup, and even fragrances. So in terms of expansion, in terms of growth, are you looking at furthering these product categories and markets, especially with the help of this funding that you've gotten recently?
So, there is a lot of new launches which are planned in the existing categories. We are not looking at new subcategories. We think we are broadly present across all the important categories, but there are some white spaces in terms of benefits where the brand doesn't have presence right now. So that is something we would like to explore. Our international expansion also started around a year back, and we now retail in the Middle East, in Southeast Asia, and have just started retailing in the US. And these are very, very early days for us. So we would like to double down on the international markets as well.
All right. So you're essentially stating that you are already present in some international markets, but are there other international markets that you're also looking at? I'm not talking of any near-term timelines, but in the longer run, what really is your vision for your international expansion?
Yeah. So we are already retailing internationally, Sumita, and there are some compliances, etc., which are still underway. Some compliances have happened, and some more compliances are happening as we speak. So we think in another 3 to 6 months' time, most of these compliances will be in place, and we can really start the journey in a more meaningful manner in some of these geographies.
All right, Anurag, let me on that note ask you about your long-term goals for the company. Do you envision the company going public, or will you be focusing on private growth for now? Now, why I ask that IPO question is because companies beyond a certain size, they look at venturing into the IPO segment, into that space after a while. So if that's something that you're looking at, then what are the timelines that you're looking at?
In the short to medium term, Sumita, I think we will be focused on private growth. Over the long term, I think IPO is a given for any company beyond a certain size. Given that we are backed by venture capital and eventually some private equity players might also enter, to give them exits, eventually we will look at an IPO. But that's, I think, in the long term. Short to medium term, we are focused on remaining private and doing what we do best. Yeah, possibly, Sumita, 5 to 6 years from now. Our existing investors have a fund horizon of 2030, and we respect that. So we will try to facilitate exits around that time.
Anurag, 5 to 6 years from now is a pretty long-term window that you're looking at for the IPO market, and of course it would have changed massively by then. But one final question before we let you go, and this one is on the company's financials. Now, Traction suggests that for FY24, your revenues doubled to over 200 crores. What are your revenue projections for this fiscal, and is the company profitable?
Yeah, we are expecting close to 100% growth in the current financial year also. So FY25 should also be 100% or thereabouts kind of growth over FY24. We are not profitable yet, but I think the online channels are profitable, but the offline channels we have been investing. So the blended P&L is not looking profitable at the moment, but another quarter or two, I think we will start churning out some profits at the company level as well.
All right, so you're looking at profitability in the next few quarters, and as far as revenue expectations are concerned, well, that's excellent that you're looking at achieving that close to 100% in terms of revenues. On that note, Anurag, thank you very much once again for taking the time out and speaking with ET Now on the company's growth plans and its trajectory. Well,